Hey everyone, welcome back. If you follow Penny Biotech, this one's for you. Plus Therapeutics, ticker PSTV, has quietly been stacking up some moves lately. The stock has been volatile, but there are some real developments that make it worth watching closely. So let's dig into what's changed, what's working, what's risky, and where it might go next. Right now, Plus Therapeutics is a clinical stage company focused on radiotherapeutics and diagnostics for central nervous system cancers. Their lead drug is called Rheobic, which targets diseases like leptomeningeal metastases and glioblastoma, both of which are devastating conditions with very high unmet needs. Alongside that, they've developed CNSide, a diagnostic platform that could soon start bringing in commercial revenue. One of the biggest catalysts recently was the announcement that United Healthcare will provide national insurance coverage for their CNSIDE cerebrospinal fluid tumor cell test. This kicks in September 2025 and opens up access to more than 51 million lives in the United States. For a company of this size, that's a massive opportunity. What makes it especially compelling is the test's reported sensitivity of around 92%, meaning it can detect tumor cells with a high degree of reliability. Clinically, that's huge, and from an adoption standpoint, it adds credibility. On the financial side, things are tight but improving in some areas. In the second quarter of 2025, Plus recognized about $1.4 million in grant revenue, slightly higher than the $1.3 million from the year before. Their operating loss narrowed to about $1.5 million compared to $3.7 million in the prior year. Net income was reported at $5.2 million or 2 cents per share, but that was mainly due to a non-recurring gain on derivative instruments, not product sales. So while the headline looks good, it doesn't mean they've reached sustainable revenue just yet. Another interesting move was the restructuring of a dilutive financing deal earlier this year. Initially, they had about $15 million in financing that included warrants capable of diluting shareholders by over 1.5 billion shares. They canceled those warrants and changed the terms, cutting down potential dilution significantly. That kind of decision matters because in biotech, extreme dilution can crush sentiment. By restructuring, they gave investors a little more confidence in management's ability to balance fundraising with shareholder value. Looking at the pipeline, there are multiple shots on goal. The ReSPECT-LM trial is progressing. They're preparing pediatric trials for conditions like high-grade glioma and ependymoma, and regulatory discussions are ongoing. If even one of these trials shows strong results, it could be a major driver for the stock. Meanwhile, the diagnostic side with CNSide gives them a more immediate commercial angle. Launching in Texas first and then potentially expanding nationwide gives them a pathway to generate revenue faster than the drug pipeline alone. But the risks are real. As of June 30th, 2025, they had just under $7 million in cash and investments. That's better than before, but still very small when you think about the costs of running clinical trials and trying to commercialize diagnostics. Their operating cash flow is still negative, so they will likely need to raise more money in the future. Even with the warrant restructuring, dilution remains a possibility. And on top of that, even promising trials don't always translate into regulatory approval or market adoption. The CNSide test is promising, but scaling it, winning widespread provider adoption, and navigating the insurance landscape are big hurdles. So where does that leave us? In the near term, I think the stock could hold steady or see modest upside as the United Healthcare deal takes effect and CNSide starts generating real revenue. If trial data comes back strong and adoption of the diagnostic tool gains traction, the stock could see a much sharper move higher. On the flip side, if cash runs out faster than expected or trial timelines get delayed, the downside could be significant. That's the double-edged sword of Penny Biotech. The swings can be huge in either direction. To wrap this up, Plus Therapeutics is high risk and high potential. The insurance coverage deal, the narrowing of operating losses, and the restructuring of financing are all positives. But with limited cash and the long timelines for drug development, this remains a speculative play. The payoff could be huge, but the risks are just as real. What do you think? Is Plus Therapeutics setting itself up for a breakout moment, or is it still too early to believe in the story? Let me know in the comments. And if you got value from this breakdown, don't forget to hit like, subscribe, and stay tuned for the next update.